G'day everyone, welcome back to Pete's Investing, June 13th, 2023. This is the spot silver price update. On our weekly and daily, we're still in a neutral positioning. I'll go through those in a minute. But on the hourly chart, we've hit our targets on the divergence, on the CCI divergence. Looking at the weekly first, we've got the triple moving average of the price chart. It's still not aligned with the CCI moving averages, the CCI 150. So it's giving us this neutral signal. It was in a bit bullish signal previously, but it's currently in a neutral because they're not quite aligned. So I prefer to take it when the weekly and the daily are aligned, take trades on the hourly time frame. On the daily, likewise, it's been uncertain for a number of days now, after being bearish for a few days back there. You can see here also we did hit this key support at 2267. It bounced up and currently following these two diagonal descending lines to the downside. Now that was a response to this bearish divergence on the CCI versus a flat divergence on the price chart. We had our target when the price broke below that lower channel. I drew a channel there between that divergence range. If you enter in short there, and our initial target would have been between a 38% and a 50% retracement of that wider Fibonacci range. So it hit that quite nicely. It actually fell below the 50% and hit that support level, as I said, before bouncing to the upside. So I always take the closest Fibonacci range once it breaks out of that channel. There was another divergence back here, bearish divergence, and that was also hit. I won't redraw the Fibonacci's or the price targets, but that was also hit because of this decline on the Fibonacci. On the smaller time frame, the hourly, we've currently got this, we draw this previous range. I know it's a bit of a rainbow color here, but basically what we had here was a bullish divergence on the price chart versus a bearish divergence on the CCI. We drew this channel, you can see there, between those highs and to the lowest candle in that divergence range. If you had you gone short, and that was before our last video, we said if you gone short there, and our targets would have been the 38% in that first rectangle down to the 50%. And our secondary target would have been the 50% to the 61%. It did hit the first target range, and the wicks actually hit into the second target range as well before bouncing up. So that divergence has played out quite nicely as well. So again, in terms of the target range, we look at the previous Fibonacci range between that low and that high. So we look at that closest Fibonacci range as our target range. If I zoom out as well, you can see there I've got a long back test and a short back test running up there. You can see that average down. We don't use stop losses. It averaged down there on the long, and it averaged there on the short side. So you can see there as the price was declining, you would have averaged down on the long side, and as the price was increasing, you would have averaged down on the short side. The way to avoid those average downs, as I said in the beginning of this video, we want to make sure that the weekly, the daily, and the hourly are aligned in terms of those moving averages, and you would have avoided taking those. So you can see there back here in June 2022, go back to June 2022, you would have taken primarily short trades there. You can see there, June 2022, during that period, you would have taken primarily short trades. And likewise, June 2022, back here, primarily short trades as per the indicator. So again, I like to trade the hourly based on the weekly and daily when they're aligned. So to understand how to trade this and other trading strategies, subscribe to my Patreon page, where we also do weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.